Perfect. So Igor is a 25-year-old investor. I don't know how old you are, not to go there,
55.
but if you're 25 years experience in investing, you're not a, let's say, a teenager anymore. You're mainly representing TMT Investment Fund, and where you are a partner, but you're also a co-founder in many, let's say, investor arena kind of associations, schools, angel syndicates. You created Angel Deck, Garage Syndicate, and also Startup Kotik, if I pronounce it correctly.
Right.
So can you present yourself maybe more in details and tell us a bit about, how did you start 25 years ago? What was the context? Because of course it was something very new to the market.
That's right. Well, after such a great introduction, I'm going to start being very shy and will not know how to start. But I'll try to be really short. So I was born in Russia. I moved to the United States 28 plus years ago. I became a US citizen many years ago. I spent actually, interestingly, most of my time in the former Soviet Union, in Ukraine, where I had a lot of investments and continue to invest. Also, I feel really horrible about the war that's happening, and really the presentation that I'm going to give is going to be very much affected by this horrible war that's happening right now. But about me, yes, I started a bunch of startups. Some were successful, some were not. Back in the 1990s, I was the CEO of Epsilon Games. That was a big gaming company in New York City. We wrote more than 70 games for MSN TV, Web TV, Microsoft TV, and many other companies. And almost in parallel with this, I started another startup, which was called Fotki, F-O-T-K-I, which, by the way, had a lot of users in Romania. It had altogether 25 million users, I think probably over 100,000 easily in Romania. It was a big photo sharing company long before we started in '98, so long before Facebook, Instagram, and all the others. And I sold my shares to my partner in 2008, I think. And I also started a company called The Internship, which was a portal for graduate students studying medicine, jurisprudence, and business, MBAs, JDs, and MDs. And I sold it very quickly in 2 years to a Manhattan institute. So made a little bit of money, started investing. My first 15 investments almost all failed. They were really stupid. Yes, almost 15, 14 of them failed. And the 15s did not pay for the other 14 because they maybe made like 3 times the money that was invested. I learned a lot of lessons from that, and I started investing much smarter. And I joined as a partner a VC firm, which is very successful, called TMT Investments, Technology, Media, and Telecommunications. We're a public company on London Stock Exchange. We made 100 venture investments. We had more than 20 profitable exits, which is unusual for a venture fund that invests in early stage companies. We were the first investors in 5 unicorns. Although in this crisis, one of our unicorns, Backblaze, stopped being a unicorn. It went public on NASDAQ for $1 billion. And then the price went down to just 200 million. But I think after the crisis is over, hopefully they will be a unicorn again. I had the privilege of being an early board member of 2 companies that became unicorns, Reich and Backblaze. Reich sold for $2.2 billion to Citrix. And I also co-founded and did 2 angel communities of over 1,000 angels combined, Angels Deck and The Garage. And right now with my Ukrainian friends, I'm working on putting together a specifically Ukrainian angel startup. We don't have a name yet, but we'll come up with that. I understand Ukrainian perfectly well. I don't speak it well, but it's easy for me because they all speak Russian very easily, like a second native language. Also, I invested as a VC, like I said, in about 100 deals, as an angel in almost 200 deals. So it's a lot of experience. It's a lot of different deals. My record year was in 2021 when we made 31 venture investment and 74, I think, angel. So over 100 deals in just 1 year. It was an absolutely crazy year. But last year we only did 5 VC deals and probably 30, 35 or so angel deals. But still, as you could see, every couple of weeks, every 2 or 3 weeks, I make deals, mostly angel deals. And I look for companies mostly here in North America, also in the United Kingdom, in Latin America, and also in EU. I have not invested yet in any Romanian startups, but I'm open to it. So if you have fast growing startups with at least $1 million in revenues that are based in Romania, I'd love to hear them. I'd love to see them. But other than spending a lot of time introducing myself, I want to be helpful and I want to say things that would be useful to you. So I'm going to talk in the remaining time about 2 things. One, how venture capital and angel investing works, how it doesn't work, and about the horrible state in which the investing is right now, in which the startups are right now. And I will start with bad news and I will end with good news. So the bad news, there is a horrible war going on. The markets are unstable. Because the markets are unstable, a lot of investors do not believe in investing. A lot of investors are waiting. There is a tremendous amount of capital in North America even that is called so-called dry powder. So it's like when you're preparing for war, you're creating this powder for bullets, and the amount of this dry powder is crazy. For venture capital, just in the United States, there is over $300 billion right now. $300 billion in venture funds, which is not being very actively invested this year. In private equity, and venture capital, as you know, is part of private equity. So private equity just does bigger deals, later deals. It's 1.3 trillion. So just in the United States, the amount of dry powder is $1.6 trillion. It's like a huge country GDP. It's a tremendous amount. And the reason why most of us are not investing is really because the prices of the startup, the valuations, they continue to slide, they continue to fall. And so naturally, you invest in a company, things are going great, but a year later, the valuation is lower. Why would you invest, right? So everybody's waiting for stability. And of course, when there is war, there is no stability. So that's the bad news. Everybody's scared. But there are lots of good news. One good news is I see more and more startups that are growing fast and that are using their own money to grow. Another good news is, as an investor, I see wonderful valuations, which are not fair to startups at all. Just like valuations 2 years ago, as you remember, were not fair for investors. It was 20 times annualized revenues, 25 times, even 30 times annualized revenues. So right now, it's also crazy and unfair towards startups. Typically, it's 6 times revenues, sometimes 8 times revenues, but I even saw and even invested at 4 times revenues. I realistically think the average, if you look for many years, for the last 25, 30 years that the markets in startups exist, it's typically about 10x, so 10 times your annual revenue. So right now is a great time to invest. If you ask me what is the right strategy, and like I said, I invested in hundreds of startups. I failed many, many times. The only great strategy that I believe in is investing in a company that you understand, investing in the company that demonstrated actual growth, not on paper, not in a great presentation and by somebody like me who likes to speak and who speaks smoothly and says, you know, just give us the money. In 20 years, everything will be great. Don't look at the numbers. Look at how smart I am. I know everything. This just doesn't work. What works is only numbers. So my biggest advice to every investor, don't trust anything except for numbers. There is a great English saying, I'm sure some of you heard of it. It's called money talks, bullshit walks. So show me the money and follow the money. If you see the growth, if you see from months to months, the company continues selling, if you see that CAC, customer acquisition cost, is not crazy, if you see that lifetime value, LTV of the customers is good, if you see that the ratio between LTV and CAC, so in other words, the customer acquisition is not too expensive, but the customer generates enough profits, if you see that the profit margins, the startup doesn't have to make profits, but the startup needs to show you unit economics where the company will not be losing money forever. Because if the company is losing money forever, nobody is going to buy the company. With a few exceptions, maybe 2%, 3% of the time, when the technology is so amazing that the company will be bought for technology. But believe me, I had dozens of exits. I had many, many fails. Almost never the company is being bought for technology. And even when the company is being bought for technology, the price is low. We only read these great reports. Wow, the company was bought for $200 million. This is excellent. But then you talk to investors and you say, wow, congratulations, guys. You sold the company for 200 million. And they say, yeah, the thing is, we invested in it 5 years ago at the valuation 100 million. And you say, well, you know, it's not that bad, but, you know, still you made 2 times the money. And they say, no, not really, because after me, they raised money from somebody big, and that big had the liquidation preference. I'm sure you know what that is, the 3x like liquidation preference. So the company invests $20 million at whatever valuation, and then whenever the startup exits, first thing, this company gets 3 times what it invested. So I don't know what the liquidation preference of those guys was, but if somebody invested with 3x or 4x or 5x, maybe very possibly they got much less money that they invested in the company. So it's really sad if you don't look into numbers. Always look into numbers is my only great advice. This is super important. And of all the numbers, revenues are the most important. The burn rate is very, very important, especially in 2023, when the capital markets are tight, when investors become very scared and very greedy, and the startups go around raising money. And it's, you know, as they say, there is a great fairy tale, The Wizard of Oz. And there is a great saying all Americans know, we're not in Kansas anymore. So when Ellie, if you read the book or saw the movie, when Ellie and Toto were brought to this wonderland where the Wizard of Oz lived, and she looks around and she says, Toto, I think we're not in Kansas anymore. So it's the same with startups. In 2023, we're not in Kansas anymore. It's not 2021. The good times are gone. They will come back. They will definitely come back. This is really great news because there is so much money, $1.6 trillion just in the United States. As soon as this horrible war is over, as soon as the markets are stable, what we're going to see, you can tell me later, Igor told us he was right. You will see something completely crazy. It will be like nothing seen before, because the capital markets never had 1.6 trillion of dry powder. When the crisis of 2008, I don't see very young people here, forgive me. So you all must remember the 2008, right? When 2008 happened, there was then great growth after that. In 2009, 2010, things stabilized and the great period of growth started. But the amount of dry powder venture capital had was less than 100 billion. The amount that private equity had was, by some reports, 300, by other reports, 200 billion. But altogether, it was either 300 or 400 billion. Right now, it's four times bigger, 4 times bigger. So the growth will be unbelievable. I think the people will be throwing money wherever they want, because the markets will definitely be pushing and saying, we have the money, invest, invest, invest. So this is great news for you. If you are startups right now, my unfortunately advice for you is don't fundraise because valuations are horrible. As they say here, bite the bullet. So, just like brace yourself and try to work on growth. If you see investors who are willing to invest, raise money, don't raise much because valuations are really bad. If you find investors who are, I don't want to say stupid, but idealistic, but I want to say stupid, but let's just say idealistic and love you and believe in you, take more money, but understand that valuations will be low, and the valuations will be low throughout the whole unstable market. My prediction is that at least for the next year, year and a half, it's a horrible business predicting. Mark Twain always said, when you make predictions, predict for 50 years from now. You know why? Because most of the people will be dead. Nobody will remember what you said. So I'm making a big mistake by Mark Twain. I'm predicting for a couple of years from now. So my prediction, I know it's risky, but that's what I predict, is that it will take another year, year and a half for things to stabilize. Unfortunately, it seems like Russians still have a lot of weapons and a lot of stupidity. It seems like Ukrainians still have a lot of, readiness to fight, and the West supports them. And it doesn't seem like there is a lot of, progress one way or another in the war. So I think it might take a lot of time. Secondly, the elections, the double elections are coming in the United States, as you may recall, in November of 2024. So almost a year and a half, a little bit more than a year and a half from now, there will be presidential elections and elections in U.S. Congress, where the full House of Representatives, the lower chamber, will be reelected, and 1/3 of the U.S. Senate will be reelected. This is going to be a little unstable. Because in the U.S., both, I frankly don't like the left and I don't like the right. So both left and both right are fighting, and they are completely crazy in their demands, and there are no kind of smart politicians as far as I see right now. Everybody wants to lie. One side wants to build something crazy and another side wants to build something crazy. So I don't know how we're surviving, but still it's a democracy and a really great country for building business, really great country to live, quite frankly. So I lived here for 28 years. So it's going to be very unstable, but as soon as the instability is over, I think we're going to see tremendous investment. So for startups, try to create great growth drivers, try to find ways in which in a couple of years, when the markets are back, you will be prepared, because my prediction, and you will see if I'm right or wrong, is that crazy valuations of like 20x, 25x, they will return. They will not stay for a long time, but the amount of capital that will come to the markets will be crazy. For investors, I would say continue investing, strangely. I do not recommend not investing. Why? Because you can invest in amazing deals, in incredible deals that you will not see in 2 years or in 3 years when there is a stability. Very low valuations. Like I said, the numbers I'm mostly investing in right now is 6x to 8x to annualized revenues. I think it's unfair to startups. It's a little low. Secondly, a lot of startups with really great numbers coming to the market. I like that a lot.
Igor,
Yes.
do you hear me? Sorry. Just can you mention the when you say 5 or 6 or 8 times revenue, is this for software like deep tech or SaaS, or is it, what kind of a product are you mostly investing in?
It's really, thank you so much. It's really, I'm going to find the Bessemer Venture Partners Cloud Index, and I'm going to send it here. This is the biggest secret of Silicon Valley. So Bessemer Venture Partners, and I sat on one of our boards of directors in Pipedrive with these guys. Oh no, not in Pipedrive. In I forgot which was the company. Oh, in Reich, in Reich, and they published this index, which I very highly recommend to you. Okay, here it is. Here in the Zoom chat, I posted it. So this is what they run, is what well, not every, but most of Silicon Valley venture capitalists look into. The of revenue. So I would say I speak about every company. It's definitely, I agree, it's definitely somewhat different in high tech. Where if you invest in space, if you invest in pharmaceuticals, if you invest in biotech, if you invest in programming language database and stuff like this, then it's pretty much, to be frank, impossible to say what valuation is. It's like, as they say in good restaurants, when you see at the end of the menu, they say fish of the day, market price. So it's a market price. You don't know what the price is, whatever.
Is AI entering the same category with an open price? Everything coming up on artificial intelligence
Yes.
type?
Yes. And word of warning, be super careful with AI, because I think the party hasn't even started. Very few people know what's going on. I was sitting on a panel recently. It was a really great gathering here in Silicon Valley, more than 400 entrepreneurs and investors, and we were discussing AI. And the guy next to me was a senior director at Google, and I think throughout the whole conversation he was just smiling. He was like, okay, yeah, right, okay. And I think, and I talked with him, and he's also a Russian speaker, and I'm like, so are you guys working on something? He's like, yeah, you'll see. So my feeling is Google is working on something really, really amazing, really, really incredible. And it's going to be huge. And I think a lot of others are working on something big. A lot is going to come out of China. A lot is going to come out of Japan, probably South Korea as well. I'm sure the Europeans, Germans were working on some interesting things. The British, Canadians, so many American companies. There's so much investment. I'm going to participate in one Y Combinator graduation in a few days to see their demos. And it just seems like there will be dozens of AI companies. So be really, really careful. A lot of them say, we're the geniuses. We're going to capture the world. And then they're going to spend the money. You'll never hear from them again. So it's a dangerous thing. It's really important to understand what the market will be like. And to be frank, nobody knows. Everybody's crazy about OpenAI, ChatGPT. They're amazing. They're incredible. They have amazing backers. It seems like Microsoft is going to build Bing and everything else on them, and its power, its money, its connection, its genius developers. The founder, Sam Altman, and I had the pleasure of speaking with him a few times when he was head of YC, is incredible. His pure intelligence, his genius, like Steve Jobs. But it's not a fact that this company will be a winner. There will be lots of others. So I could say a lot of other useful things, but if you want, I could stop and we could spend 30 minutes on questions and answers. And I see a lot of questions.
Yeah, is it okay if I kind of facilitate, or yeah, is it okay? Good. Make myself useful on this evening. So, one question that I also had, Igor, is, okay, let's say I'm an investor, I want to search for new investments, like you said, good valuation, but what if my own portfolio looks not so good? So I invested, maybe, made an unsuccessful investment. It became maybe even more unsuccessful from the valuation point of view today. One of the questions was basically on this topic. So can you share from your experience if you've made a move from an initial investment to a better investment, or how can you shift from unsuccessful to a successful? Can you do something about it, or is it just, you know, that's it and put it in the statistics? And so this, I would invite you to answer.
Yeah, so it's really a huge question. I started, like I said, from many unsuccessful investments, and unfortunately, it's a story of a lot of investors. People very rarely learn from other people's mistakes. You really learn from your own mistakes because it's more painful. It's like training dogs. You know, you can't train dogs without some sort of discipline. You can't just always be sweet and kind to them. Unfortunately, they need to learn. And so, like human beings, we need to learn hard way. Unfortunately, that's bad news. So good news for you is everybody fails. Everybody fails in something. There are not a single investor. I never met a single investor who would always be successful. So don't worry about it. It's just a part of the process. But don't spend too much. Don't invest too much. If you don't have enough money and you start investing everything, this is a horrible idea. It's you're going to be nervous, you're going to be making bad decisions, and you will probably fail. So only invest some of your money and, you know, do something with others. What do you do when a lot of your companies are bad? First of all, there is a huge saying that you learn, so true. Don't throw good money after bad money. When your startups come to you and they say, oh, can you add 50,000 more? Can you add 100,000 more? The better answer is always no, because the best startups don't ever ask you for the money. The best startups say, we don't need the money. And you say, please, can you take 100,000 more? And they'll say, but we don't need the money. And you're like, but come on, you know, you could use it for this and this. And I'm like, okay, fine. This is the best investment. So never try to throw good money after bad. Sometimes you feel, oh, I could save them. The only thing you could do, and I did it many times, is say, okay, you need 50K, but why? And they say, oh, we need is just, you know, survive until the next month. And you always should tell them, find, you know, 3 more investors, or find 150,000 more, find this and this and this, and then come back. Never be the one who's saving the company. My advice, if you see that your portfolio is not doing bad, is not doing well, my advice, don't try to fix what you can inside, but talk with the companies, because sometimes you can help them not with money, but with the right introductions, with the right strategy. I had one of my companies where I'm on the board of directors, and I'm an angel, a VC, and a syndicator there. And altogether, myself and my colleagues, we put $2.8 million in the company. So it's a significant amount of money, and the company is great. The revenues are close to $10 million a year, but months after months, for the last 6 or 7 months, the revenues were sliding. The burn is higher and higher every month. The CEO, who's a great guy, tells me next month will be break even, next month will be profitable, and months after months, it's, you know, burning. And then last month, they said, okay, we only have 200,000 remaining in the company, and you know, our burn is 300,000. And we say, okay, so you guys have 1 last month to live. And they said, no, we will be profitable. And we say, yes, but you say every month we will be profitable, and you were not. So we sat down in the board together with them, and it was a good exercise. And together with them, we cut out a lot of expenses, and we talked about a lot of things that we can do in order for the company to break even. So I'm looking at what is to date, March 25th. I'm very much looking forward for what's going to happen in 6 days, and hopefully they're profitable. So that's what you could do. You could help your companies, not with money.
I will combine 2 questions in one. Of course, especially for new investors, they always want to know, what's the criteria? How do I choose if I see 5 or 10 startups in a month? And the 2 questions combined would be, okay, what makes a difference between a good and a bad investment decision? Because what we are interested is the process of decision, not just the outcome of it. Because of course luck plays a big role, but also, does it matter if it's already backed by a VC? You know, if you hear no, but they got money already, should it make you like, no, then I want to get in? Or should it be like, no, I want to take my own decisions and I don't care if somebody else is backing them up? So how about that?
So that's such a smart question, actually. But both of the questions are very smart, and the answer is both simple and also somewhat complex. So this, I'll start from the last. When there are other VCs in the company, is that a good thing, bad thing? Does that mean things are taken care of? It's a good thing in the sense that, especially if it's a big VC, it has the following great things. One, they probably did really great due diligence. So that means the company is not lying to you, or if they tried, it was found out. They probably figured out what's happening in the market. They probably figured out who the competitors are. Because they're a big company, they would offer great advice. Because they're a big company, they offer deep pockets, and further on in the progress of the startup, they will continue investing because they have a great reputation, or at least somewhat a reputation, if not huge. A lot of other investors will also come. They will give a great advice. They will help hiring great employees. So that's all on the good side. On the bad side, if the venture capital is strong, a lot of these VCs, and that includes me, are kind of strong-willed. And I am a nice guy, but there are sometimes when I say, okay, this is how we're going to do it. You can't, do this and this anymore. And maybe it's good, but maybe it's bad. Also, like I said, very often VCs take what's known as liquidation preference. I'm sure you're a very sophisticated crowd, but if any of you don't know, look it up. It's very important to know what it is. And like I said, it's a number of times that the amount you invested should be returned. And if the company is doing great, it doesn't matter, right? If the company sold at 10x, then liquidation preference doesn't matter. But because nobody gives 10x liquidation preference. But if the company sold for, not a huge amount, and that's a lot of exits like this, then very possibly the fact that somebody huge participates, that huge company might have 3x, 4x, 5x liquidation preference, and you're not going to see your money. So that could be really bad news. Another reason this could be really bad news sometimes is if you're very small investor in something really large, which sometimes is great. I'm a small investor in a lot of unicorns, but it's bad because nobody wants to talk to you. Like you would write to the CEO will not even reply because, right, she or he raised $30 million and you put $50,000. Who cares about you? You want your money back? Okay, take your money back. Nobody really cares. So there are good things and bad things. As far as I would say, overall, it's a good thing if somebody big, if a venture capital invests, but keep in mind the bad things. Now, how to make investment decisions, how to invest in great companies or in good companies, and what makes the difference, good companies compared to not very good. I already said that numbers, money talks, bullshit walks. Don't listen to words. My biggest suggestion to startups, and there are some startups I think present here, and to investors, numbers. Three components of the deal. Numbers. Nothing else matters. And of the numbers, the most important are revenues, burn rate, growth rates, LTV, CAC, margins, and all of this stuff. That's what's important. Everything else is what they call lyrics. It's just nice songs. We're going to be great. We're excited. It's wonderful. We're better than competitors. Okay, fine. Yeah. Okay. But show me the numbers. So numbers work. So I would say the best decisions and how to make decisions among the different great companies you can invest in. My advice, invest in the fastest growing companies. Invest in the companies, especially right now, with very low burn rate, or at least with burn rate that becomes smaller, right? Like it could be big, but if it becomes smaller and the company continues to grow, that's great. Also, if the company has a lot of DAO, a lot of money, like, I recently invested in a company that is raising $30 million. They have a huge burn rate, about $500,000, but with $30 million, that who cares? They're growing really fast. They know how to raise money. So I didn't care much. And definitely, especially right now, look for companies with reasonable valuations. I invested several times right now in companies with 4x valuations, 4 times annual revenues. It's amazing because 2 years later, you will see at least 10x will return, but you will see my prediction, the 20x will return. So even if the company is doing just okay, your money will grow several times just because you invested low. So that would be my advice. But also, of course, everybody, there are different, if a couple of my venture friends will be talking right now, they will say, Igor, you're always like this. You're always numbers, numbers, numbers. That's not so important. Invest in people. People are what makes the difference. Great people, people who can present. No, because I invested a lot in people who are genius presenters. Genius. They know how to sell. They know how to sell themselves, but they don't know how to sell to customers. A lot of these people failed. So I disagree. If somebody is great, that great person built a company that is growing. And if the only thing that person is great is talking like myself, yeah, that just doesn't cut it, as they say here. So
Igor, did the average time to exit change over 20
yes.
years, or can you say what's the average for an exit from angel investing?
Yes, it did change. It did change. Several things happened. First of all, the amount of venture capital and angel investing in M&A became much greater. The number of exits became much greater, but also, of course, the number of startups became much greater. The M&A professionals, the people who do M&A, mergers and acquisitions, become much smarter, and they become much more technological. They become much more knowledgeable. And because of that, deals happen faster, not just the deal itself, but the deal from the time when the company started to the time when the company exited. When I started, it typically took, with the exception of some geniuses, but it typically took 10, 12 years from the start to the exit. I would say right now it's typically 7 to 10 years. Again, there are companies who spend 15 years and there is no exit. And there are companies.
And when you say the exit, is it for when the IPO is done, or you mean earlier even?
So IPOs are a very rare animal right now. Even 2 years ago, only a small percentage of companies exited IPOs. So I had over 20 exits, only 2 were IPOs. And I think it's also a very high ratio. Typically, I would say it's 1 to maybe 30, 1 to 50 companies have IPOs. Mostly it's M&A. Typically, companies are bought either by a large private equity. So for example, Pipedrive was bought for $1.5 billion by Vista, the largest, that's our portfolio company. What we see typically, and that's another advice why everybody, I think, should look for a little more later stage companies. So I mentioned I run 2 angel groups, the Garage and Angels Deck, and I'm working on the Ukrainian group. What we see is investors more and more want to invest in later stage. They don't like investing too early, and I understand them. And I'm like this myself, because early stage is very risky. It's too early. You're going to take a lot more times, 10 years or maybe more, to an exit. The chances that the company will fall apart are very high. The chances that the company will not come up with a product, that there will be no great market fit, and many other things, the chances are very, very high. So you should really be aware of it.
To build on that, is there a possibility to exit sooner, like have a cycle from very early on and then exit at Series A, for example? How do you know when it's the time to exit? If it's possible, of course, you might not have the option, but if you do, how do you know when to exit?
The paradox, and right now I have about 200 angel investments and I have 100 VC investments. So the paradox is all the companies that I want to exit are not doing very well. All the companies I don't want to exit are doing amazingly well. And, people would say, hey, do you want to sell shares and I'm saying, why would I sell shares? This company is growing 5 times a year. What am I going to do with this money? It's just going to sit here. I'm going to try to find some company. If I'm lucky, I'll find a company that grows 2 or 3 times. But this money is working 5 times or 6 times a year. I don't want to sell. So that's a horrible paradox. So what that means is there are 3, and that's also probably useful information. There are 3 categories of companies in everybody's portfolio. There are superheroes that are growing super fast. You don't want to exit them. They're growing so fast. Please continue to grow. And when you exit, I'm going to make a lot of money. There are so-called laggards. In American English, these are like very slowly moving characters. These are laggards. So you really want to sell them. Nobody wants to buy them because they're not doing well. And then there are the middle ones. And typically most of a portfolio are the middle companies that are somewhat growing. They're not really great. But sometimes some investors want to enter these companies. So my advice is to look for companies that are called secondaries brokers of secondaries. There are dozens of companies, at least in the US, I'm sure in Europe as well, and in Asia too, that specialize in selling shares in the secondaries. So sometimes because somebody wants specific segment, for example, fintech SaaS or medical services, and you have some companies in your portfolio, they will say, hey, I know you have some shares in XYZ company. Can I buy $500,000 worth of the shares? And you think, $500,000 is not bad. It's going to be almost 2x what I invested 3 years ago. Not really great, but I'll still make some money. So you'll do it. So my advice, always look for these secondaries guys, create relationships with them. It takes a lot of time. So as investors, if you have your employees, your assistants to work on this, get them to work on this. It's a lot of work, but it pays.
Thanks, Igor. Next question would be about the projections of the unit economics. Okay, let's say you look at a business plan, at a projection, right? And of course, you look at this unit economics. How can you tell? What do you look for specifically to realize if it's a possibility, if it's a realistic one, or if it's daydreaming? Especially since you want to see that the cost of acquisition goes down, yep. So that the profit, the break-even point becomes possible. Yep. How do you know?
So first of all, it's always everything is going to be amazing. Everything is going to be great. Don't worry about that. It was just a bad month. We're going to do better. We have these new sellers. We have the pipeline of deals. It's always like, don't worry about it. So whoever you talk to, and I understand, seriously, guys, I wasn't born an investor. I started startups, and I feel the same. It's not because startuppers are lying. They believe in this. They really believe in this. Look, I just talked with this guy, and he said he's going to pay $1 million. It's almost there. It's almost a signed contract. Of course, this guy will never call back again, but it feels like it's going to happen. So first of all, never trust in projections. Projections don't exist. This is something just to demonstrate the thinking, but it's not something you should base it on, only the previous numbers. Secondly, the most important answer, always look at the numbers in dynamics. Never continue speaking if the startup does not want to give you numbers in dynamics. So never take our CAC is this and this. What was it previously? Oh, we didn't estimate it. Come on, seriously? You're 3 years old and you don't have a history of your customer acquisition costs? What's your LTV? Our LTV is great. It's this and this. Okay, can you show me what it was for the last 24 months? Oh, we don't have it. Come on, guys, seriously? So this is the most important thing. Look at things in dynamics, and always look. Sometimes they send it to you in a chart. You always need the visual curves, and you should. One thing is to do it yourself, but you're investors, so you should say, sorry guys, but please send me the curve and not just the numbers and the curve. And you look at it, and if you see good tendencies, right? Like for example, if you see the burn going down, if you see the customer acquisition costs going down, if you see LTV becoming better, this is great. I would always invest in tendencies. I would not invest just because the company is doing great, because sometimes they would be doing great just before the fundraising, and then the fundraising is over and things will become much worse. And also the same is true, by the way, about growth. A lot of companies are saying, oh, we're going to be fundraising in 3 months. Okay, let's just put all the money into customer acquisition cost. We're going to show great growth. Then we get the money and then we can relax. So you should always look at least for 6 to 9 months. So the short answer, look for tendencies. Look, most importantly, for customer acquisition costs. If the customer acquisition costs are really, really high and they're not going down, and all you hear is some promises in the future, this might be trouble, because this might mean that their unit economics will never work, that they will always be paying $3 to make $1, which is okay if they're really amazing high tech, like if they're building some space delivery lab and you believe in this and you understand, okay, no problem. But if it's a 95% of companies, if it's, I don't know, SaaS subscription service, if it's a cloud storage, et cetera, and their CAC is always very high and it's not going down and their LTV is not working, then believe me, there will be a time, even if they're great and big and like $50 million in sales, when their customer, I've been through this, when their potential buyer is talking to them and the buyer will say, well, like everything, we don't like your CAC, come back in 6 months. And this is going to kill the company because they were ready to sell, and in 6 months they're not going to show anything. They're going to continue burning money, and then they will start running out of cash, and it's a bad story from there. So CAC.
Is this something, Igor, that you learned after 15
Yes.
failures?
Yes.
I'm just
hard way. Yes.
Okay. Is there
I was so naive. I was like, oh, great. Don't worry, Igor. Don't worry. We have these great customers. This CAC, it was just bad yesterday. We have, everything is changing. We discovered this new channel. Never listen to this.
Are there any other, let's say, changes in the way you assess that you gain through 15 failures, and what are they?
Nothing is more important than this rule about the numbers. Of course, one important thing I learned is psychological, and those of you, I'm sure there are some experienced investors here. Those of you who are experienced investors, I would say always look for a psychological factor, especially if you're investing a lot, if you're investing like $500,000, $1 million, or even more. Always look for psychological factors. See how a startup interacts with you. It's sometimes, especially if you did it many times, it's sometimes pretty easy to see that the founder is dishonest. And by the way, a lot of dishonest founders became very successful. Steve Jobs was dishonest. If you read the wonderful book Jobs by Walter Isaacson, I very much recommend it. He was super dishonest. If you read the book Difference Between God and Larry Ellison, about the founder of Oracle, he was horribly dishonest. If you read the book Hard Drive, by the way, an amazing book about Bill Gates, he was very often dishonest, et cetera, et cetera. You can continue with a lot of others. So it didn't ruin them. It maybe, unfortunately, even helped them. But as a small investor, you don't want to speak with very dishonest people. And it's easy to see when you ask, the biggest red flag for me is when I ask for something once and I didn't get it, and I asked for it for the second time, and again, I didn't get it. That is a horrible thing. For example, you say, okay, great. Can you send me the financials with the monthly numbers? Yeah, I'll send it. And then they send something else, and you write an email. Okay, thank you very much, but you forgot to attach the monthly. Oh, yeah, my financial director is working on this. This should be the end of the road. If they still don't send it, this means things are so bad, they're lying to you, things are really bad, they don't know how to present the numbers, just step away. I actually frankly learned one rule which might surprise you. Don't worry to miss a deal. This big 4-letter word that everybody in Silicon Valley knows, fear of missing out, FOMO. Don't worry about it. Almost always, yes, sometimes you miss. I missed amazing deals. I missed Pinterest, where I would made 1,000 times the money. I missed Miro, where I would made 500 times the money. I missed Secure, where I would made 300 times the money. Lots of deals. But I also invested stupidly in so many stupid deals. So don't worry about FOMO. If you feel that something is wrong with the deal, just move on. There are so many other deals.
When you create your pipeline, Igor, because you mentioned now, of course, you're missing some, you're on board with some. I know there are startups and there are platforms that are trying to digitalize the process, help investors, with the process of choosing, or also the process of communication using dashboards, reports and so forth. Do you have a system for yourself? How do you do it?
I don't. So typically what happens is I speak with a startup, I make notes, it's typically about a page, and then I share it with my colleagues if I like the startup. If I don't, I say, okay, thank you guys, but not for us. Then they work on associates and other people together with me. They work on the investment memo, which is 1 page long, which I present to my partners either at my angel entities or at the investment committee of TMT. We discuss it and we make decisions. And then later when startups report, which is basically send emails to each other saying, okay, this is what's happening. And then typically an associate will tab it all together in an Excel or in Google Documents, where there will be in Google Spreadsheet, rather, where there will be a lot of columns, like what their monthly revenues were, etc. I had a lot of great startups approach and show different solutions. I think a lot of great stuff is coming. I still have not seen anything amazing. If you guys see anything, send it over. I'd like to see it.
Okay, good. Thank you. I know Andrea is happy. She's one on the call, and she's doing such a system for angel investors and communication with startup.
Excellent.
Question from Nina, and I'm happy she's touching a more sensitive topic, which is the topic of gender, let's say, gap, or not only gender, but minority representation in venture capital. What's your view on this? Did you invest so far in such categories? And do you see a real value and an opportunity? Because one of our theses here at the Bravva Angels is that diverse teams, and especially female founders, they bring something special, which can ensure even more success and return higher than in male. We might be a bit biased, but I want to know your opinion.
It's a good bias.
Want to know your opinion for sure.
It's a good bias. It's definitely a plus for me if it's a women run or women are co-founders, and not only because I feel that it would be more fair if women would be more active in this, but because I really see, and it's a dangerous subject, which quite frankly in the United States I probably would shy away from it, but with the Romanian audience I'd be probably more open to this. It's a subject of being able to communicate. I think men are less, when we grow up in traditional societies like Romania and Russia, and actually in the United States too, in many ways, men are not really taught to play with dolls, which I don't know why, by the way. Why shouldn't we play with dolls, right? Men are taught to fight, to run, to play war games, and that's what we do. And so communications are not really a big part of what we do. We will like being leaders, and that's pretty much it. Women, when you grow up, a lot of you play with dolls and you learn to take care, you learn to be nurturing. And when you grow up and become, teenagers and then older, you learn the fine art of seduction. You learn how to charm people. And if you look at startups or investors, I don't think anything is as important as being able to charm. And men are nowhere near as good as women as being charming, because we're not taught how to charm, because it's not considered a manly quality to charm, because basically like, well, this is step one, this is step two, we need to get there, this is it, that's war. And women are more caring and more understanding and are much better. Lots of experiments were made this way. Women are much better listeners. And so theoretically, women should be able to sell better. But women, I wouldn't say it's sort of a conspiracy of male society to not let women grow. It's more of the way of this man-run world to work in such a way that whenever a woman achieves things, men kind of think like, she's a woman, let's dismiss that. And it's happening even in the United States, whereas, as you know, not everybody, but a lot of people are conscious about this, and a lot of advancements have been made. I think the time will come. It's not here yet, unfortunately, but I think the time will come when women will be in the majority of the founders, of the investors, etc., because these new generations of women, especially, are not being taught to only be nurturing and charming and nice, but also to be leaders. And not long time ago, women were not taught to be leaders, and women were not really typically offered these positions. So I think, cynically speaking, I love to invest in women because they know how to charm. I love to invest in women because they're much better communicators on average. There are also horrible women communicators and amazing men communicators, but on average, I would say women are better communicators. I think on average, women know how to be more charming. And so, yes, we invest. I wouldn't say that I would look at a startup and I don't like a startup and a woman is a founder and let's say I would invest. But in choosing startups and looking at startups where there are co-founder women, and there are lots of my startups where they are, definitely it's a big plus. And I think time will come. You will be in the majority, and that's fine. I'll look forward to that.
Thank you, Igor. It's a topic we can talk for long hours. And
happy to talk as a male about this.
Yeah. Do you also invest in projects that need a long time
No.
For a pre-revenue period, like deep tech or biotech, like specific space projects and advanced technology?
No, I don't think anything is wrong with them. I just don't like investing without numbers. I'm very much numbers driven, and unless you have a PhD in something very deep, I stay away from this. I understand.
Let the others take the risk.
Yeah, and also let the others show how smart they are. If somebody has PhD in physics or PhD in medical sciences, she definitely understands her area, but I don't. So when somebody comes over and says, this is a new space delivery vehicle, that's the end of the conversation for me. I say, that's wonderful. I know this one guy who invests in space. I'll make an intro. I just don't understand the space. Sorry.
Okay, great. Do you also invest in other assets class? And if so, what would you recommend for the angels to have as a percentage from the total, let's say, wealth available? Because literature says 10 to 50, very high risk. Maybe you have other percentages. Maybe for you it's all about startups. But what would you recommend? This split between low risk and high risk investments.
So I'm definitely a wrong person to ask this because I'm in love with startups. I love startups more than I should. It's irrational, but I enjoy working with them. I enjoy learning. I enjoy feeling that over years that I dealt with startups, I became, I wouldn't say smarter, but just more experienced. And I know so many things like this, which just 10, 12 years ago, I would have not known them. And so this is my huge competitive advantage. And if I start investing in stocks and real estate and Forex, I will be like somebody who just knows really nothing. As they say in the US, lame. I will be completely lame. I would not know what I'm talking about, and this would not be efficient. And this is not my recommendation, this is just my story. The only other class of assets where I invested in the past and stopped investing was crypto. And I invested some part in Bitcoin, and it worked great. But to be frank, it's really just a gamble. And so I don't like gambling. I believe investing in things that work, but it did bring several X's in investment. And so the remaining Bitcoin that I have right now, it's growing nicely, but I'm still going to wait. I think it might be even nicer. But I'm in love with startups, so I only invest in startups.
What do you think about the health sector? One question here is about disruptive product in health. Of course, maybe they go into the category talked before, like you don't touch, but I'm sure there are other interesting digital project that maybe you like or you think are worthy of investment.
Definitely.
Can you mention any trends on health that you're
Yes.
looking in?
Hugely in love with medical services. I think it's a real revolution. And if you ask me, you and I didn't talk about this, but you just hit it on the spot. I think it's number one right now, not AI, because in AI, like I said, it's very dangerous right now. Be really careful with AI. Things are going to change hugely. Medical services, I would say, frankly, is my number one right now, because in the US, it's very, you probably heard, it's very inefficient. It's super expensive. It's really stupid. It's very redundant. It's just really bad. And there are so many super smart people coming up with medical services solution. One huge direction, I don't know how it is in EU and in Romania, is telemedicine. Humongous right now, is just flying off the wheels. And there will be huge acquisitions there, and you're going to make a lot of money. And it's also kind of great to invest in it because you feel that it's not just, some business to business software, but you're helping people. So you're killing two birds with one stone, even though I don't want to kill birds with any stones, but you're both making money and you're making world better place. So medical services is fantastic. Of my recent investments, I invested in Recuro, which is incredible, super fast growing company, which does life cycle preventive care. So in other words, they work only B2B with huge companies like IBM, Oracle, and many others. And they work with employees all the time, and they measure all their vitals, they take their tests, and they just guide them. And it's amazing what they're doing. They're extending lives. They're making sure people are more productive, people are healthy. It's incredible. Another one is MedVidi. It's a psychological care, remote psychological care. A lot of people have psychological issues, tons of people, and not just being crazy, but more like, anxiety and other things. And a lot of people, especially men, feel stigma about going to a doctor and saying, doctor, I'm crazy, or like, doctor, I feel mentally ill. And it's much easier to do not on camera, but in voice or in chats. And so they're growing like crazy. There are lots of veterinarian clinics that are becoming digitized. So medical is my number one. Amazing, amazing segment.
Great. I wanted to ask you also about, because I had a thought when you said health and medical services. One of the trends that I read about a lot is this anti-aging. If it can be products, services, platforms, all kinds of everything, therapists, everything around anti-aging. And I think this is a huge opportunity, for startups to tackle this market. And if you're nodding your head, that I'm not gonna prolong the topic. I just wanted to know if you're on it as well.
I'm not on it. I think it's a huge topic. I have a really great friend in London, Timur, who invested a lot. He used to be, he's a former billionaire, as he says. Igor, his favorite joke is how to become a millionaire. Become a billionaire and then divorce 3 times. That's his life story. So he became a millionaire. He used to be
funny.
So Timur, yeah, it is. He's a really great guy. If you want to invite somebody who speaks on the subject, he's super knowledgeable about it.
Okay.
He built a huge company in the past in telecommunications, but an amazing guy, good friend of mine, and he knows a lot. I know nothing, but it's a great subject.
Okay. Can you name quickly a few platforms for investing, like crowd investing, maybe, because we don't have, we have Sibling here in Romania, which is the only one basically we're using. Can you just name
Sure.
a few?
Yeah, I heard of 2. I don't like making very small investments because I already have a lot of investments. I don't want to make 1,000 investments. Already it's very hard. It's sometimes embarrassing when you go to a party and somebody says, hi, of course, I don't remember people. And they say, oh, hi, how are you? And they're like, yeah, great. We're growing this and this and this. And I say, wow, this is really great. Send me the deck. And the guy looks at me and is like, you're our investor. It's so embarrassing. So I stopped saying, send me the deck. I'm like, I'm trying to figure out, am I your investor or not? So I don't want 1,000 investments. 300 is already very embarrassing. Two platforms that off the top of my head, in London, there is King's Crowd that does small investments, and I heard they're successful. There is angel.co, AngelList, which started the whole thing. I'm sure you know of it. And in a lot of investments, the minimums are pretty tiny, like $2,000, et cetera. So they're really, really great, and I highly recommend them. That's, Angel's Deck and the Garage were working on also creating our kind of crowd investing. But other than that, frankly, I'd be happy to build a great relationship with your club where we could, invite you in the deals. It would be really our pleasure to have you as well.
Amazing. Thank you very much. It's recorded, Igor. So you can't take it back.
Right. Okay.
One question coming from a very early, let's say, founder, early startup, basically. And the founder is asking, okay, but pre-revenue, maybe it's not your type of investment or moment to enter, but if you were to, let's say, look at a pitch deck, what would be the KPI that you would like to see in a pre-revenue presentation?
So it's a very important question because I really don't want, and I want, first of all, I want to apologize. Whenever I'm saying I don't invest in early investments, that does not mean I think they're bad. It just means that I have some rationale for why I don't want to invest. As a matter of fact, there is a big lecture, it's unfortunately in Russian. I don't think many people here understand Russian. On YouTube, there is a big lecture that I gave about early investing, and I think it does make sense, but there are several things that I would recommend for somebody investing early. First of all, to really know what you're investing in. Do not invest in early stage if you don't really understand that segment very well, because you would be, chances are, that's what I did. That's why my first 14 investments out of 15 failed, because I invested in, oh, great guys, great presentation, let's invest. Secondly, if you have great connections in a specific industry, for example, if you work in a corporation that could use this, that's a great possibility. And thirdly, of course, if you run a company in the same segment and you feel, I'll just invest 20K, 30K into something that I like and I'll enjoy it, I'll help these guys, and I have all the right contacts for them, I'll help them. So to turn back to the question, for an early startup, numbers are as important as they are for later startup, as important, because you can very easily check a lot of things. For example, you can spend literally 30 euro or like 50 euro to run some advertising on a channel and see what the conversion is. And you can do it several times and see how the conversion changed. You can do several landing pages for your app or for your site and see how different offer converts. And again, you see the numbers. You can do a poll of even 50 users. I'm sure you have at least 50 users. And you can run specific numbers and tell them, and again, do it in dynamics. This is very important for founders. Founders always forget about dynamics. Founders love to give very one-dimensional answer, like, what's your CAC? This. What's your LTV? This. That's wrong answer. Our CAC has been improving for the last 12 months is the right answer. Our LTV has been growing for the last 9 months. It was this and became, this is great answer. You can measure that. These are important numbers. And there are many, many other things. If you're pre-revenue, the word pre-revenue, with some exceptions, like if you're building a car, if you're building, again, a space station, you're pre-revenue. But if you're building something that is simple. I don't know, like a site that sells children constructor online. I recently saw, and they're saying we're pre-revenue. And I said, but how hard is it to build it? They say, oh no, we have the prototype. And I said, but how are you pre-revenue? Go to a bunch of different shows, go to children's shows and just sell it and just get the first revenue. Oh, we're not ready. The packaging is bad. Like this is bad. This is wrong. Just as they say in Silicon Valley, fail easily, fail early, and fail cheaply. So don't spend money on the packaging, on this and that. Go to a show, talk to people, get the feedback, and tell them, wow, this is great stuff. Can I buy it? And you'll say, well, it's not ready, but maybe for 10 euro. And they'll be like, great. And you sold your first stuff. So get to the numbers. You don't need to have $50,000 in monthly sales. Just get to some numbers and always measure. Everybody who's a smart angel would not want to talk to you without numbers. And it's totally easy to be an early stage company with numbers. You should just think, what other numbers can I get? You can get LTV, you can get CAC, you can get the margins, you can get the first customer channel acquisitions, you can get user conversion. You can always do the polling, even if you have 50 users. Just poll them once a month. Ask them the same questions, but the questions which they don't answer with words, but with numbers. Like, how would you rate my product? How would you rate the ease? How would you rate this and this? And if this is improving, great data, awesome data. Your investors would love it.
Thanks, Igor. How are you on time?
I'm good. If you guys want to spend a few more minutes, I'm happy to oblige.
Okay, great. There are some questions about, getting you as a mentor, especially pro bono. But what I'm hoping actually is maybe we can repeat the sessions with you from time to time, and maybe even, come with some pitches or with some ideas or with some investment proposals. And maybe we as angels, we pick your brains on what we're looking at, because most of us here are, let's say, rather new investors than experienced investors. Also, our market is like 5 years old, so we couldn't be, even if we wanted to. So it would be great if we can get your help further.
Absolutely.
Invest with you, or pick your brains and get your feedback about our opportunities.
So one answer is very easy, because I have 300 companies. I don't take any. The only companies that I'm talking about, not really advising, but being on board of directors, are very late stage companies. I can't physically. It's nothing personal. I don't have the time. As far as talking again, would love to. I'm always happy to help and to share some thoughts. Would love to see if if you want to cooperate with the garage, for example. Happy to send you deals. Likewise, if you have deals that are at least in $1 million in revenues in EU market, but we're mostly focused on the US market, of course, but I'm sure you have some that are global. We're happy to look at them, of course. So let's cooperate. I enjoyed the questions, by the way, are excellent. Every question was just right in the spot. I have not heard a single boring question, because sometimes you hear very boring questions.
I want to end with a question also on women, if I may, more on women as investors and angels. There's still a very low percentage. They say it's about 14-15% of women on the investment side, whether they are partners in funds or angel investing. How do you see this? Is it of course you would say, okay, bring your money, ladies, because we have startups coming in, so nothing bad with that. No, money has no gender.
Right.
In the same time, I'm more interested if you notice any kind of additional value when there is a woman as investor on the board or in the selection process, like assessment, or even helping out the startup.
So very, very good points. I agree with you. The number of women investors in the industry is super low. And just yesterday, I was speaking with the COO of the garage is a woman, Paulina, and I never worked with a better person in probably in my whole life. She's just amazing. I hope I'll work with her forever. She's the easiest to work with. She's the smartest to work with. Just incredible. As a matter of fact, if you want to invite somebody to talk about being a woman managing men, she's the one. She can really talk about this. I agree. There are very few women. I think the number is growing, but growing very, very slowly. I think it will take a lot of time. It's not going to happen in a few years. It will take a lot of time for a lot more women to come in the industry. I think the advantages, like I said, two things. One, women are much better communicators, and women generally are more nurturing types. They're better listeners. Men just, make up their minds and they run. And so one really great advantage, and I sat on a lot of boards with women, one really great advantage of having a woman as a partner and as a coworker is that men make decisions too fast, and men are too defensive. When you make a decision, you stop trying to care if it's right or wrong. It's your decision. You need to defend it. This is the end of it. You're going to fight for it. And very often women notice things that men do not. And very often in the argument, in the conversations, women start paying more attention to different discussions, to different arguments, not just to I'm right, you're wrong. And so in this respect, it's really great to have women, because we are in the very ego-driven industry, in the industry with people with huge inflated egos. And sometimes it's kind of very hot in the room of big board of directors, because every director thinks he's a genius, and whatever he says is touch of genius. And presence even of one woman makes it more of a noble discussion, more of a kind of carefully weighted argument. So I would say definitely that, and definitely the ability of women to be more discerning, to understand the arguments better than men. So I would say these are the advantages. I definitely would welcome, not because I'm talking to so many women here, but I definitely would welcome more women investors. They think better, I think, and it's a great combination. And by the way, I'm not saying men are horrible, men should go away, etc. All I'm saying is there should be a great mix. Men are great. We're we're also smart.
Yes, I agree. We couldn't agree more. Thank you very much, Igor. I think we will close it for today. I just want to really say thank you. It's been a great session, and really, really appreciate your honesty and information and everything. And very happy to strengthen this collaboration. Again, the idea of doing deals, I would love to receive some opportunities from you, and I will disseminate to our community. And also repeat some maybe educational events together and have you as guests. This would be amazing for us to learn from your experience.
Great.
I want to thank everybody present.
Likewise, Linka. Thank you so much for the introduction, for facilitation, and for doing this. Everybody, thank you so much. I really appreciated your time and your listening, and really great questions that I hear. Happy to be helpful. Always limited on time, but whenever I have time, I'm happy to.
Yes, we will take advantage of this session and make it as a first one out of many. Thank you very much to everybody for participating, and hope to see you again soon in deals or further educational events at Bravva Angels. Thank you
so
very
much.
much.
Have a great evening, Linka. Thank you so much, and everybody.
Bye.
Take care. Good evening. Good weekend.
Have a good weekend, everybody.
Mulțumim frumos!